If you're curious about what's happening to gold and Bitcoin, they started to spike in the last few days. You'll have ratings organizations that add to this cascade by downgrading the United States. That happened on Friday. You'll have very smart people starting to signal that this is a much harder problem than they initially thought, way beyond what most people thought was a reasonable place to be for the United States economy. And so what will the implications be as rates go to those levels? You'll de-lever from the United States. You'll sell US debt. You'll own things like gold and Bitcoin. This is the opposite of that. I think what happened was there was really not a lot of financial literacy used to decide what to actually put in and what to cut. And that lack of discipline is going to create, I think, a negative set of consequences.
Today we have billionaire investor and CEO Chamath breaking down what's happening in the market and why he believes the United States is in trouble. He notes that factors like tariffs and recession fears are driving market volatility. And according to Chamath, a major market rally is on the horizon. Chamath has been an outspoken proponent of Bitcoin and has shared his perspective on its effects within the current economic uncertainty. He believes Bitcoin's value will continue to surge, and as a risk asset with a market recovery, Bitcoin will increase alongside it. However, Chamath emphasizes that uncertainty remains a critical factor. As the market remains in limbo, Bitcoin will face pressure in the short term. With Bitcoin's price currently sitting just over 108,400, Bitcoin is expected to rally even further in the coming weeks. Chamath shares more details and his predictions for the days and weeks ahead in his latest interview as the market braces for a massive shock. Drop your comments down below and subscribe if you enjoy the content we do here.
I think we have to be careful here. So Jason, the political calculus will be for the president to decide how much credit he actually wants to take for this bill. Because even though it has his name on it, the contents of the bill are different in actual facts than what I think he intended. Mm-hmm. And what I mean by that is when you look inside of what happened in the 11th hour last night, it's disappointing. If Doge was meant to be a reflection of the American voting population's desire for meaningful reform in government, cost controls, some form of austerity, and to get this debt spiral in check, this is the opposite of that. What happened was, in the 11th hour, you had a handful of people abstain. You had one person that fell asleep on the floor of the House, so he wasn't even woken up for the vote. And in the middle of all of that chaos, what happened was all kinds of things were added and attached and canceled at the last minute. Because what happens is you have to have these puts and takes, as Freeberg described. If you want to spend over here, you have to find a cut over there. But I think what happened was there was really not a lot of financial literacy used to decide what to actually put in and what to cut. And that lack of discipline is going to create, I think, a negative set of consequences. So what are those consequences? A set of things that I think will be hurtful to average Americans. Those are way beyond what most people thought was a reasonable place to be for the United States economy. And so what will the implications be as rates go to those levels? You'll de-lever from the United States. You'll sell US debt. You'll own things like gold and Bitcoin. If you're curious about what's happening to gold and Bitcoin, they started to spike in the last few days. You'll have ratings organizations that add to this cascade by downgrading the United States. That happened on Friday. You'll have very smart people starting to signal that this is a much harder problem than they initially thought. That's how I personally interpreted Elon's comments over the last few days. So what was the House supposed to do? I think what they were supposed to do was implement some form of austerity. They were supposed to, by the will of the people, pass a rescission bill. They were given that rescission bill. It was just $9 billion. They couldn't even pass a $9 billion rescission. And instead, they passed a $4 trillion inflation to our debt. Now you hand this to the Senate. The Senate is in a very difficult place as well. Do they want to, quote unquote, claim victory and say, here you go, President Trump, here's your bill? But they'll further bastardize this thing, and it will be even further away from what I think benefits MAGA and benefits Main Street. So who does it benefit? Current course and speed right now, this bill is about traditional Republicans and traditional Democrats circling the wagon. You're going to see energy prices spike. You're gutting the number of electrons that will be available for things like AI. And the math is wrong. So when you sensitize this thing to a 4.5 or 5 or 5.25 rate, so meaning not what the CBO used, but the real conditions on the ground, this thing is an albatross. And I think, unfortunately, for President Trump's agenda and for a MAGA movement, this is the worst of all conditions. The financial markets will punish this. And then the last thing I'll say is now, to top it all off, I think that Jerome Powell will see the writing on the wall. Many aspects of this thing are inflationary. And if they're not handled well by the Senate, he has a lot of room to actually increase interest rates.
Oof.
So I would just say that the Senate has an incredibly difficult job. I think the president has an even more difficult job about what to do right now, but the House did nobody favors. They did not do anybody a favor.
For months, he's been emphasizing to investors that all the necessary factors are aligning now. He expects we are entering a period marked by parabolic upward moves in prices. But all that is about to change as the market gears up for a shock. Tariff fears are beginning to increase, and investors are hesitant. When thinking through the situation, he recently noted that Bitcoin may experience cyclical movements, even within a broader long-term downtrend. But the bigger picture still points toward major gains, despite all the factors in the market.
But this is where I will say, I'll put my money where my mouth is, and I'll put the chips on the table to say, this is the moment. This is the moment where we either re-underwrite what we voted for, or we mistakenly pass this Christmas tree concoction. It does have President Trump's signature on the top of it. It does have some features that he asked for. But what I hope he sees and realizes is the details here matter. And without some technical maneuvering in the Senate, this is a bad bill as constructed. And if it passes, forget what any of us think, the bond markets will act decisively, and they're going to go in one direction, and it's away from us. And I just hope that we figure this out. Since 2007, 2008, every now and then the markets give you free money. One of the most obvious free money trades was the yen carry trade. And in order to execute that trade, you're effectively leveraging treasuries against the Japanese bond market. What he is saying is that there is increasing risk that that trade unwinds. When that trade unwinds, what you're going to have are net sellers of up to, as Freeberg said, $1 trillion+ of US treasuries. What will that do? It will further exacerbate the market's reluctance to own US treasuries, which means yields go even higher.
Which means interest rates for businesses and individuals go higher.
Correct.
And the only way to keep those interest rates low will be for the Federal Reserve to try and step in and buy those bonds, which will devalue the dollar.
81% of the incremental energy that's generated in the United States last year came from private enterprises that were investing in short-term forms of power that have a credit and a transfer market tied to it. This is just the financial machinery. This is how Blackstone and Goldman Sachs and Brookfield and all of these big players move tens and hundreds of billions of dollars around. They changed those rules at the 11th hour. What is the impact of that? Elon foreshadowed it. Nick, maybe you can show the headline of the article. He said, we could be running into a power capacity issue by mid next year. Now, if we knew that, why would we take the short-term incentive away to generate more electrons? All the great things that David has done, that the president has done on AI, I mean, we'll talk about what happened in the Middle East. But when the rubber meets the road and you actually have a shortage of electrons because these financial actors, they're not, and in fairness to them, they're acting rationally. You take the financial incentive away and you can't underwrite this thing. What are they going to do? They're just going to stop doing it. So in the absence of electrons, what happens? Prices go up. It's inflationary. And now you'll have to allocate electrons. Does the electrons go to an AI data center or does it go to a home? In a different example, actually on the residential side, places like Florida, I think there was like an incentive for like batteries. So if you were about to get hit by a hurricane, you can buy these big battery systems from Tesla as an example, but there are other ones, Generac and whatever, Train. That was cut out. In Texas, all of these impacts will have negative consequences. My point is, I think you have to really look at what happened in the 11th hour and fix those things, because the problem with these plans is you can't look at gains that are in years 6 through 10 to justify pain in years 1 through 5. You can't do that, because I understand how that mathematically makes sense. It doesn't make sense practically for the average American. It's just not how life works. You don't go into a J curve. We do that as investors, right? But you don't do that as a normal American, which is be on the wrong side of the economy for 4 or 5 years in the hopes that years 6 and 7 are good. That's the point. That has to get fixed.
There is a non-linear relationship between the deficit and interest rates, which drives up the debt problem in a non-linear way, and it gets away from you and you can't fix it. And that's what the market is telling us, is that the current bill that's being passed out of the House is showing such an extraordinarily high deficit that the market does not want to buy the debt from the government. Rates are now climbing, and that creates a massive problem for the government.
The crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Chamath's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a 6-figure price target. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. He asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Chamath says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Kaiser presents 2 bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. What do you think about Chamath's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below.